Hey everyone, my name is Mike Munsell and I head up partnerships here at Heatmap. Thank you for being here at today's event. As you may know, Heatmap is a newsroom dedicated to telling the inside story of the clean energy transition. In addition to daily news stories and emails and podcasts, we also host regular events, virtual events like this one, as well as in-person events. Next month, we're actually headed to SF Climate Week. We're hosting a big heat map house. So if you or your colleagues will be in the Bay Area, we'd love it to see you. We'll drop a link for that in the comments. And on to today's virtual event. It is the Climate and Energy Tech Investment Shift. And we have an awesome panel of investors here today for the conversation. Today's event will be about 45 minutes, and then we'll spend the last 15 minutes in Q&A. So if you have any questions, enter them into the chat, and we'll see how many we can get to. This event is being recorded, so we will also send it out via email if you have to drop off early for any reason. This live virtual event is done in partnership with FischTank PR, so we thank them for their support. Now, I'd like to introduce you to today's moderator, Eric Fischgrund. Eric is a veteran clean energy and climate tech communicator. He's the founder of FischTank PR, a communications and marketing agency with a strong focus on clean energy and climate tech. Over to you, Eric.
Thank you, Mike. Appreciate, as always, you and the Heat Map team, your support. Before I let the panelists introduce themselves, again, my name is Eric Fischgrund. I'm the founder and CEO of FischTank PR. We're a media relations and corporate communications firm specializing in tech across energy, climate, sustainability-focused industries and applications. We've been doing this for over 12 years. We're ideal for brands who want to be assertive and clearly articulate their value positions and experience and insights within their respective industry. We're a team of 25, not too big, not too small, with a reputation for getting results the right way. Very excited for today's panel. I'd like our three panelists to introduce themselves. Johanna, why don't you take it away?
Okay, great. Well, thanks, Eric, for having us. Great to be here with Andrew and Daniela and yourself. I'm Johanna Wolfson. I'm a partner and co-founder at Azola Ventures. We are an early stage venture firm in climate tech with a twist. That twist is that we aggregate especially risk embracing capital from catalytic and philanthropic sources alongside more conventional sources. And what that lets us do is, and in fact, what it mandates us to do is support companies at a stage or at a level of risk that is outside the typical venture envelope. We tend to come in perhaps when a company is just spinning out of a university, or in some unusual cases, maybe we're coming in when a company has sort of done its first run out in the venture market, wasn't successful, after a round or two, but we think there's something really important there in terms of a big climate solution that hasn't yet seen its day, and we might work closely with that company to kind of rebuild and go back out to market. So in any case, where we're very focused is on climate solutions that are potentially huge levers, but really undervalued at the moment, and potentially, sort of pre-market. So we invest early, often the first institutional check, and I know we'll talk more about today the kinds of areas that we're especially focused in. So I won't get in there yet, and eager to hear from Andrew and Daniela as well.
Great. Go ahead, Go ahead, Andrew.
Thanks, Eric. Thanks for having Obvious on this discussion. I'm Andrew Beebe. I'm one of the managing directors at Obvious, and I lead our focus on climate investing. We're a 12-year-old firm, typically seed and A investing, so a little bit later sometimes than Johanna comes in, and I think a little bit earlier than Daniela. And we are looking for world positive entrepreneurs who are trying to tackle the world's systemic challenges. And we do that in areas outside of climate, but I lead the climate practice. And for the last 12 years, we've probably invested in 30 plus companies across the spectrum, from electric mobility to grid stability to scaling of the electron economy. And we are always on the hunt for those types of founders in that seed and A stage, and we typically write $5 to $10 million check sizes and tend to be very involved in our companies. We're all former operators. I was in the solar industry for almost 15 years before joining Obvious.
Thanks, Andrew. Go ahead, Daniela.
Hey everyone. Again, thanks for having us here. Great panel. I'm excited for the conversations to come. I'm Daniela Shapiro. I'm a senior managing director at HASI. I lead all of our behind the mirror investments. HASI is a publicly traded company that has been around for over 40 years, has been a publicly traded company for over a decade. Our focus really is essentially sustainable infrastructure. We have invested over, our assets under management is over $16 billion today, all of which on this spectrum. And differently from Johanna and Andrew, we are not investing in companies or platforms. We're mostly a asset level investor. It doesn't mean that we couldn't, but it really isn't our focus. Investing at the asset level is what we have historically done and became really good at. Again, our focus really is investments that are commercial stage already and that have some sustainability attributes to it.
Great. All right, let's jump in. We're going to use as the panelists said, each of their firms represents really a different stage of investment. So, in the order we introduced, Johanna, Andrew, and Daniela will be the order, that we answer questions today. Starting with our first, what energy sectors or technologies are you paying the most attention to right now?
Okay, great. So there's a lot to say there. I'll try to not monopolize too much time. In terms of sectors, we really try to, again, be a bit counter-cyclical. That's consistent with our mandate to do catalytic style investing. So if there's an area getting a lot of attention in the venture market, it's not to say we wouldn't touch it, but it's going to be less likely. And if we do, it's going to be on some sort of non-obvious dimension. Non-obvious. There we go. Maybe two examples of that happening recently in our portfolio. I'm just going to name the last two investments I did in wildfire and geothermal. Neither of those areas are I would say under focused on in climate venture right now. The wildfire investment we did though was in kind of a heavy assets play. Company called Rain doing autonomous wildfire fighting by outfitting Black Hawk helicopters and going after state and municipal customers, which we believe is the way to win, but is a hard way to do it. And so that's at odds with a lot of what we see getting funded right now, which is important in wildfire tech in terms of, maybe more of a purely software layer or predictive analytics, a lot of analytics and imaging. Again, important, but we think alone is leaving a really important set of the solution set undeveloped, and that's where we would focus. Geothermal, the last investment we made in a company called Dig, doing shallow drilling, breakthrough drilling approach, shallow geothermal for HVAC. So again, geothermal is getting a lot of attention, including, our first geothermal investment, Zanskar, where we're co-invested with Obvious, and really proud to have been part of the early days of that one. We probably wouldn't make an AI geothermal investment today because, we think the market is covering that well. On the other hand, shallow geothermal for HVAC is getting less attention despite the focus in geothermal, and that's a huge play for us. And then I'll just briefly say, so that those are examples of kind of non-obvious dimensions in currently more popular areas. But a lot of where I spend my time is in places where the tide is out right now, and I think it's a really good opportunity to find some next generation kind of technologies that can build on the prior generation. Alternative proteins, carbon removal. We're seeing some really interesting opportunities in those areas, even though they're, I think, objectively out of favor. Ag, same thing. And then more forward looking, I spend a lot of my time looking very focused on adaptation and resilience and super pollutant technologies to get at methane and nitrous oxide emissions, where we see very little venture activity, but relative to the climate impact, we really need to be doing a lot more. So, the Venn diagram of the time I spend looking for new opportunities is definitely very focused on that slice of things where there's not that much venture activity today. Andrew,
Great.
you're it.
Yeah. Thank you for using the word obvious 3 times in your answer. I love Azola Ventures whenever I'm thinking about what am I not seeing and what's coming around the corner. Azola is there with the answers. So if you want to see, I think I have a pretty cool job and we see all sorts of really cool tech, but I think Azola is on the true cutting edge of what's coming next. I typically, so we are a pretty broad fund. We invest in health and robotics and other things. But within each of these areas, we tend to have very specific thematic areas of interest in any given period of time. And so right now in climate, I'm really excited about clean electrons. Zanskar is a great example of that, but anyone who is finding ways to scale very quickly. So one of our companies, Halcyon, is an AI platform helping big energy companies and hyperscalers and data center builders figure out how and where to site and deploy big pieces of equipment. That could be a power generation site, a data center, a transmission line, and using AI to rapidly speed that process, which I think everybody is probably familiar is quite a bottleneck these days. So they have a great concept of time to power or speed to power. How quickly can you get from a whiteboard to an actual deployed effort? And they've done a really great job delivering on that. So any kind of time to power, speed to power on the electron front, I think is of real value to us. I'm also really excited in anything electric mobility. So Fleet Zero is a company that we've been really excited about, which is electric maritime, completely decarbonizing that world and turning it into robotics. Pika is another company that does fully autonomous flight with fixed wing aircraft, and they are now doing that with, I think, over 20 aircraft around the country, around the world. So those are just 2 big areas, sort of this scalability of the grid and stability of the grid, and then electric mobility.
Great. Daniela?
Sure. So HASI, if you go and look at our information that is publicly available, there are 3 sectors that we are organized internally in 3 buckets. Behind the meter, which is the team I lead, and that includes everything from residential solar to community solar, energy efficiency, microgrids, etc. Everything that is on site or close to site. Then we have our grid connected team that is mostly utility scale generation, such as wind, solar, and battery storage that goes with it. And then we have another area called FTN, which is fuels, transportation, and nature, where we have made a number of renewable natural gas investments, work on fleet electrification, and some other stuff. And we continue to look for other opportunities to invest in assets that are mature, that are at the commercial stage and can scale. Most recently, we've spent quite a bit of our time looking for what those next opportunities might be. We are getting some traction in things like controlled environmental agriculture, clean materials, We're looking into carbon capture applications. And again, as I mentioned before, our mandate really is to look for essential infrastructure assets that have a sustainability component of that. So anything in that spectrum that is commercially that is commercial and it's prime for scale is where we tend to focus our time on.
Great. Excuse me. Andrew mentioned data centers. I want to congratulate the panel. We made it 14 minutes in before they were brought up, which is easily the best that any energy panel has done in the last 2 years. They've obviously created the biggest buzz and controversy in 2025 and so far into 2026. Given the obvious demand, but the challenges in bringing them online, what are you focused on within the data center discussion now, Johanna?
Yeah, great. A couple things. One is that to state the obvious, but I'll state it anyway. There's been nothing like this in history for climate tech companies in terms of a moment of extraordinary market pull. And I am, like probably most humans, daily both frustrated with and, fascinated by our march toward an AI-driven world. But there's no denying that this is an extraordinary opportunity for companies to see costs down and learn really quickly in the market for based on extraordinary demand. Now that's true for particularly power companies and companies that have, a play within data center infrastructure. I realize that is not all of climate tech, far from it. But for that subset of companies, and it's pretty big, it's built environment too, it's grid edge technologies, it's power, it's storage, it's a lot. So the opportunity for those companies to get quick learning cycles and scale probably faster than we would have, thought possible, if it is indeed a winning solution, is truly extraordinary, and we're seeing that in our portfolio. It's so exciting, and that could be kind of the cost down answer for companies delivering then power to the grid, to residential and other commercial customers, et cetera, is real. And we're seeing those learnings accrue more quickly in our companies, in the portfolio of companies than, I would have thought possible. We also caution companies that when they're engaging with, data center customers, hyperscalers, you need to be building a portfolio approach just like anyone else would. The fact is we don't know how this market is going to develop. Everyone has their pet theory. Most people are going to be wrong about how exactly that plays out. Some people will be right. The point is you don't know. And so you need to be developing your business in a way that doesn't sort of overly index on the data center market resolving a certain way. And for a company that has, great fundamentals and a strong value proposition, that should be very doable. It might require some discipline, but it should be quite doable. For a company that is more a solution only in one kind of hyperscaling of the hyperscalers, that's honestly, less attractive investment for us and not something that we would be as interested in if just you happen to be riding this moment but don't have fundamentals that would survive, a bubble. So we try to, help companies engage, navigate with some downside protection as well. Then I guess I'll just say lastly, with my catalytic investor hat on in terms of specifically what we're looking at or what we're looking for with respect to technologies that can plug into this ecosystem. Again, because we're counter-cyclical, we're not going to be as active in some of the technologies that are getting, quicker funding. I'm very happy that that's happening. But, we're going to be looking at more what are sort of the under-evaluated corners of the hyperscaling phenomenon, whether that's water use or um, you know, maybe next generation technologies that'll be the wave after this one. That's more where we're focused. And cheer on the sector as it moves along without the need for catalytic capital where that's happening on its own.
Andrew?
Yeah, agreed. And this moment reminds me, it reminds me historically of the space race where there was just an unbelievable portion of the GDP, amount of capital coming into a space somewhat unexpectedly. And it does two things. One, it has a burst of economic activity right in the sweet spot and the sort of the core, but it also has knock-on effects, just like the space race did, or arms race in some cases. The knock-on effects impact many, many other industries, as we all know from history, all the things that came out of our quest to get to the moon. And it's even better this time around because it's not just one buyer, the US government, but it's many buyers. And I think the quantum of dollars is substantially bigger as well. So this is a tremendous opportunity that we're in the middle of. And power, as Johanna said, power generation is a piece of it. I'll just, on top of what she said, I'll just add some details of areas that we're excited about. There's a company called Veer, which we're not an investor in, but does very cool cooling of high transmission lines. This is a very hard thing to get utilities to adapt because it literally involves cooling within the cables themselves, and yet it could have a huge impact on our ability to carry a lot more power across transmission lines. They have now focused more and more on shorter lengths of the cable for the data center application. And this is a great example of, look, you couldn't sell to utilities because they would take years or decades to get into a purchasing mode or go through pilots, et cetera. But you can sell very quickly to a very, very motivated buyer because of that time to power need. There are other examples of like solid state transformers, a company we're also not in called Heron Power, which is building out solid state transformers. This is a hot market. A lot of people are in that zone. But it was hard to sell to utilities because this is just a new paradigm of technology for the energy sector. But it's a lot easier to sell to data centers who have real power constraints and also have supply chain constraints. They just need the product. So those are just small examples of the way this sort of ecosystem around a data center will play out. We're also seeing new paradigms with on-site power generation. A lot of us have solar on our roofs. We have on-site power generation at home, but we have never really seen a working example of something the size of a city in terms of power needs, a data center or two, deciding to completely go off grid. Whether that actually manifests itself or not, I think is to be determined. But if it does, or even if it does partially, there is a whole raft of new technology and a lot of very interesting software that's going to help manage that transition to resiliency or independent power. And that feeds right into a macro trend over the last 30 years of just a smarter grid and one that is a little bit more distributed and thus more resilient, and usually when that happens, also a cleaner grid.
Great. I'm fascinated to just hear all of the possibilities that comes with new industries. It's always interesting how these new industries kind of create enormous opportunities for others to come and support and make it a great way to move forward. We're always kind of like thinking about the doomsday. It was like, what does it mean for the job market, etc. But hopefully it means that we are inventing newer things to overcome all of that. From HASI's perspective, there are two ways we think about the data center world. One is how it's powered, and that's the kind of investments that we do today and that we hope to continue to be doing more as our clients are providing those generation solutions for the data centers themselves, either through like a virtual power plant on a grid connected utility scale type of solution, or as Andrew mentioned, behind the meter solutions with distributed applications. So we hope to see a lot of those solutions continue to come, and we'll continue to support our clients and finance and invest on those type of generation to support data centers. The other way we think about it is how do we support the deployment of the nascent digital infrastructure that takes into account, the usage of sustainable materials, lowest possible emissions, better usage of water that is super efficient from an energy perspective, and also that is addressing the big elephant in the room these days, which is affordability. So those are the two ways that we think we will continue to be involved with this industry as it continues to grow initially. But as Andrew mentioned, we are also very hopeful that it will bring in another wave of new technologies that will make it all possible, become commercial and scalable pretty soon, and create more opportunities for us to continue to expand our horizon in investing.
Eric, can I just jump in on the affordability issue, which I think is a great one? I'm glad you brought it up, Daniela. This is another sort of knock-on opportunity. Some of it, I think, is just perception or concern about future risk, but either way, we have really awakened the American conscience around their power bills and how much they're paying. And I think a lot of people have noticed, oh, yeah, now I look again at the bill, it turns out it's much bigger than it was a couple of years ago. There are a host of reasons for that, but there are also flooding into the market, I think, a raft of solutions, which is exciting. So we have a company called Arbor Energy, which is helping people switch to cleaner electricity providers, almost always cutting their bill by hundreds of dollars per year in the process. That only works in competitive markets, so places where you're allowed to switch your provider, but that accounts for something like 60% of US households. There are plenty of other folks as well doing things with vehicle to grid and using the batteries that are sitting in our driveways to help mitigate some of the peak shaving. This is good for the grid, it's good for renewables, but it's also really good for the pocketbook of American consumers and homeowners. So I think that that's a really exciting sort of yin-yang moment as well here.
Andrew, I'm glad that you brought that up. Johanna said, I wrote it down, she wants to see how this plays out. And I also take that very much at the community level. I live in Eastern Pennsylvania, which is a very purple state. They don't agree on anything. People, it's 50-50, split down the middle, except opposition to data centers. There are signs all over Chester County, where I live, about 2 data center build-outs, or build-outs in the next few years. There's been no construction yet. Yes, there's going to be significant backlash, and many of our clients we're already working with on softening some of their messaging, just so something doesn't come back and bite them a year or two from in particular at a local level. So of course that bleeds into the energy price crisis, which Andrew just started to reference. Natural segue. It's also now, when we planned this panel about a month ago, the Iran war hadn't started. And now folks are feeling it at the pump, in addition, of course, to their home energy prices. So does this impact investing? I think, Andrew, you started to answer it a little bit, but I'm curious how the whole panel is paying attention to this story. Johanna, thanks.
Yeah, well, I really agree with Daniela and Andrew's comments and that prompt, Eric. I absolutely, I've reflected on this. I mentioned adaptation and resilience earlier, so I'm going to loop that all together because we know the climate is changing. The adaptation and the need for adaptation and resilience is so undeniably clear, and I will put the energy affordability crisis in there too. We know which way these are going. And we can be much more sure about the way those things are going than a lot of the market projections that investors typically underwrite investments to. And so once you kind of see how true that is, it simplifies in some ways what we're doing here because it's just so obvious the types of solutions that we will need no matter what. And that's one reason that we are such strong proponents of geothermal. It's because if we can find a way to make that the cheapest energy source, it's an absolute no-brainer, and it's everywhere. So, those types of conclusions drive our investments both on an individual company level as well as kind of how we think about the portfolio overall as we expand into underwriting pure play adaptation and resilience investments. Unfortunately, it's because it's completely obvious that the world will need a lot of them, and will need better products despite, a worsening climate, and that people will pay money for that, and will need solutions. So I think it's always hard to say something like this as an opportunity. We sort of don't want that to be true. But it would be foolish not to recognize, the kind of unmistakable march here and be finding the solutions that will win in a changing world.
Yeah, I mean, I think the person on this panel who may benefit the most from this challenge is you, Eric. The comms challenge for the hyperscalers and everyone at the local level is profound. I was with somebody recently who runs energy for all the data centers at one of the biggest tech companies in the world, and she was lamenting that even with strong federal support, the real challenge is the ground game on communications with local, just as you described, Eric, in your neighborhood with local communities. And the good news is, I think there are solutions there. So that I think that's a manageable component. I just say with regard to the war, um, this to me is about American competitiveness. We see China on a very clear push and now 20-year journey to decarbonize their economy, mainly well, maybe with multiple goals, but with one of them being removal of outside influence because of the need to buy liquefied natural gas and oil from other sources. And that's why over 60% of the passenger vehicles sold last year there were electric. And the numbers are even more staggering on the heavy duty equipment front. The same is happening in Europe, where they are becoming an electro state. At first it was sort of a green driven push, but now it's about resiliency and security across the region. America, I think, in part because of our strong reserves on oil and gas, we have been slower to make that transition. And yet, when you see these price spikes and you see the rest of the world moving to a much more a cleaner, more efficient way of working, we run the risk of falling behind. And I think that policies from this administration for sure are putting us in a less competitive position because we're not keeping up with things like electric vehicle innovation, wind and solar deployment, if not core technology, and even things like energy storage. So there's a lot of work to be done. I think politically, some of that is ground game communications, and then some of it is all the way up to our federal government.
Andrew, I on a macro level, I very much agree that if we spend our time defending old things rather than promoting the new things that inevitably are happening, we put ourselves in a very bad position competitively. So hopefully there is time for us to wake up and continue to move in the right direction here. I think of like sustainability and affordability, things that go hand in hand. I mean, for example, renewable energy is the lowest cost generation, period. Now, renewable alone may not solve all the problems. We need all of the above type of mentality in terms of how we deal with our needs and our competitiveness and etc. And that is, to me, brings the other aspect of all of it. I think Andrew and Johanna have articulated and make us feel all very like positive with all these new technologies and new thinkers and folks that are solving the problems in a different level. But then there is the aspect of like, what does it mean in terms of the regulatory framework and market design that we will allow those technologies to be deployed at the value that they create, really? I'll give you an example. Distributed energy has been there for a while. Then the second phase of it was software to integrate distributed generation that has also been deployed for a little bit. And the reason those things haven't really scaled to the potential they have is because the regulatory framework is really not there yet. And there's resistance or is low, like, we're just slow in understanding how those things can actually bring value to the table and decrease all of the investments, or at least reshape the investments that are needed on the transmission and distribution infrastructure to make this all work. I'll give you an example. The New Jersey's governor created a few executive orders that actually is a step in my view. It's a signal in first steps in the right direction to kind of try to put those things together, and with the main intention being affordability, right? So it's like it's making use of technology that exists, give those technologies the avenue to actually operate efficiently to solve the problem that we all want to solve, which is we want to be able to have access to energy in a way that we deserve, and that we as a nation are competitive. So I think that's the step that it's most difficult, because it needs some political alignment, it needs some political will. But I hope that we as a nation really think this through the right way and put all these great minds and technologies that are coming to fruition to solve the problem in a position to actually solve this problem. And one more thing, in terms of the macro, you ask the war and etc. What are the implications? I think we all understand the implications at the pump and etc. But another big issue with that is, what does it mean in terms of interest rates, etc. Because this is a capital intensive sector. Interest rate matter, and if there are disruptions or it becomes more difficult or more expensive, then it inevitably translates into energy costs going up, not lower.
No, thank you. Thank you. I thought all those answers were very helpful. There's so much nuance that goes into it, especially when we start talking about other countries, and especially as we start talking about solutions that are cleaner. And I think, to that note, our panel about a year ago at this time, we had a discussion around the term ESG and a little bit less or so on the word climate, which were in the middle of, a number of companies scrubbing them, more than a number of companies scrubbing them from their website. I've seen a little bit of what I think is I don't want to say a comeback, that's probably too optimistic, but I do think that there are plenty of companies out there that are still leading with that sort of messaging. So I'd like to ask the group, is the word climate still investable and marketable? And I know, Johanna, you lean into it a bit at Isola, so I'm looking forward to your answer.
Yeah. Is the word climate still investable and marketable? I don't know. I suppose it depends who you ask. It's not for everyone. And I don't begrudge that. I think, folks have to make decisions that are going to be long-term protective of their business. But kind of to what I said before, the climate crisis is not going away. Unfortunately, we are very likely to breach 2 degrees. I personally believe higher than that is more likely than not. This is a trend that has a long arc. It is longer than political administrations. And I think the best investors will look at those 2 timescales and make determinations that are commensurate with their own investment timescales. You're right. We do lean in on the climate crisis because we on our identity as climate investors. That's not a fit for everyone, by the way. We see, as we're as venture investors, we raise money as well, right? And then we package those into investments in companies. When we're out raising capital from LPs, we do see, some who for whom us as we as a climate as a unapologetic climate fund are not a fit right now here in 2026. That's okay. We need to be doing our work in a way that kind of is very forthcoming and where everyone knows what they're signing up for in terms of, again, a multi-decadal challenge that we're chipping away at when we invest in companies that we think, over the course of 10, 20 years can remove or avoid a gigaton of carbon emissions. That's still what we need to be doing. As many of our, peer investors, as we hope, will be focused on that as well. And I will also say that, as much as it's true that this AI moment and data center hyperscaling is an opportunity for companies and is a very understandable place for climate investors to be putting capital because there are tremendous tailwinds there that it's logical to be part of. If we only focus on that, we are going to miss the ball, even more so on our climate goals because there is still deep industrial decarb to do. There's still methane and CO2 removal to develop solutions for. There's still a lot to do. And so my hope for some of my peer investors is that kind of portfolio view of the climate crisis is still driving some of the investment decision making as well, even alongside, mapping to tailwinds, which themselves may not be long-term durable. Maybe more than you asked for, Eric, but that's my take.
Yeah, I think that's really well said. Climate is, in the world of investing, we work in cycles, and there's usually short cycles and longer cycles. Climate is the macro of all cycles.
Yeah.
And it almost feels like cheating when you sort of understand, wow, this problem's just going to get worse and worse, meaning the opportunities are just going to get better and better. And a whole bunch of other investors don't believe that. That's like amazing. Just to be a cynical investor for a second, I think this is the best. We are coming up on the best stretch ever of climate investing. And here's why. The crisis is, of course, there. Most people in the world realize it. A lot of people in the US really aren't facing it head on. So there's arbitrage there. And of course, in the US, they will face it head on. And this will not be a political issue within a decade. It will be all hands on deck. So if you know that, if you believe that, and you're ahead of it, that's an exciting place to invest. So I just think, additionally, the tourists have left the building. All of the venture folks who saw this big, beautiful, or not that bill, but the other bill before it, uh, bring in a raft of federal subsidies for climate programs and thought, oh, this is a gravy train. I'm going to come in and invest. I think some of them were misguided both by too much subsidy and also by sort of a belief that this was a gold rush moment just because of that government support. And those of us who have been doing this for 25 years, you come to see that government support comes and goes. And if you make decisions solely based on that, you're likely to be disappointed. And so I think we avoided some of that. And now that that is out of the way, we're back to pure economics. Who's going to build a better product? Who's going to build a better future-proof solution? And who's going to build something that's much, much more resilient for nature and for humanity? Those are the things we're looking for, the big idea founders that are doing that. And we will have less competition when we are going to fund them. So I think we're coming up on a golden era. It reminds me, this question about words. Words matter, and I think the labels matter. But I was an internet entrepreneur in the late 90s, and there was a big push to call everything internet this or internet that. All the venture firms became internet funds. And it sort of became redundant at a certain point. Amazon.com changed its name to Amazon because everybody got it. It's like, okay, it's not really a bookstore. I have to go to some website, and I think I can figure out where that website is. but they started as this very internet thing. The same thing is happening with climate, where it's, hey, I'm standing out here, I'm a climate, specialist, and now I think a lot of people are saying, look, we're just the future of agriculture. We just happen to be doing it with all electric drones that are autonomous instead of doing it with these big biplanes that are dangerous and carbon emitting for crop dusting. And then you go down the list, and everybody, I think, is getting back to the fact that they have a real business purpose doing a real business thing that happens to have an extraordinary climate impact. And I think you'll see more of that in the future, where it's just woven into what every industry is doing in terms of its own transition.
Yeah, I agree. And I hope this is just, humanity maturity in terms of like doing the things that need to be done rather than just following bubbles. Um, but I very much agree with the fact that the opportunity will continue to exist to do the right things, to do the right way. We were never a firm that was doing this just because it became fashionable to do that. In fact, I like the fact that we're right sizing right now, because one of the big problems you have when you have this major influx and oversupply of capital into something is that it creates much less discipline, right? Business models are much less, like strong and resilient because they just had too much at their disposal. So, folks don't have to think about profitability. They don't have, because they have money that is available to them all the time. So I do feel like this back and forth, this pendulum swinging a little bit is not all bad. For us, it does not change anything. We invest in something that we think it's a good investment. And the majority of the things that we look in as sustainable and climate oriented are first and foremost good investments. And that's the discipline that in our case will never go away. And I think a lot of other folks in this industry that have the same kind of discipline and mentality will continue to do the right things. It doesn't matter the label. We'll continue to do what needs to be done, and I think that's the main thing. We've seen a lot of changing the message, but not changing the business, and that's fine. And at the end of the day, I think the folks that are doing the investing on the right type of technologies, have the right business models, will continue to do what needs to be done for us to continue to advance on our climate goals. It is unfortunate that even in moments that you have all the hype, we would still be trending very behind of what we need to do to accomplish the progress at the pace we need to accomplish. But I'm a very positive person in that things tend to move in a way that you will find the right solution, and all of a sudden you'll find that next thing, that next accelerator that was not even in the radar. And I do think that there is something to be said with this whole digital infrastructure and all of the opportunities that it brings for us to actually create that acceleration that we haven't been able to in the last decade or so.
Great, thank you. Three great answers. I think we've got time for one more question, and then we do have looks like about a dozen questions that we will not get to all of, unfortunately. But let's see if we can maybe like a minute and a half, 90 seconds a person, starting with Johanna. What is the investor's role beyond just providing capital?
I love this question because I certainly hope there's a lot there. We tend to be, again, because we invest early, we tend to think of ourselves as partners to getting the company started. That often means kind of early team building, formalizing a board at the company, really developing a narrative that will land with other investors, maybe forming that first customer pilot contract, maybe negotiating IP. still from a university, whatever is the set of things that for that particular company is going to be necessary to make them some slightly de-risked and investable at their next round of financing, which our goal is always to make that kind of be the first competitive round of venture financing after our involvement. That is the set of things that we are focused on with that company. So it's about characterizing that set of things. You need to nail, customer traction. You need to really, show some semblance of proof of demand signal here. And that's not going to look like millions of revenues at your stage, but it's going to look like, a pilot agreement with, not one, not two, but three, different kind of triangulated customer types so that someone can then look at that and draw a line. Or, the skepticism in the market is that you as a founder, are good at A, but you struggle at B. So we need to find you a partner that, together you're going to go and be able to tackle this together. So it's very company specific. And part of the work we do with companies is try to really triangulate what is holding them back from kind of reaching the next stage, and then hands-on kind of partnership in and knocking those pins down. And we typically are quite active. We typically take on board roles and lead syndicate roles with companies in order to do that.
Yeah, that's a great list of ways that early stage venture can help. We will get involved in companies at different stages. So it's both, as Johanna said, I think it's very company specific. It's also stage specific. Things can be quite different at the later stage from the early stage. We're pretty active investors. We tend to, I think 80% of the time, we are holding board director seats because we're leading the financing that we're involved with. And we all bring to bear, operating experience from our past. I was a venture-backed founder for almost 20 years before Obvious, and with that comes scar tissue and experience, and I think also the ability to sort of be in the shoes of the founders because we have been there in our past. And that usually means early on we're helping with all the things Johanna said for sure. I think other areas that we like to bring value are around ensuring that people are building values-driven companies. We tend to back very, very values-oriented founders who have a depth in terms of their intention and their motivations. And so finding ways to institutionalize that, I love team operations and things like OKRs and finding ways to build your actual values and the mission of the business into the operating code of the way you are managing your team, I think is nuanced and difficult. It's best done very, very early. It's really hard to graft that onto a team later. We do the same thing. One of my partners was the chief strategy officer at Patagonia for 10 years, and he loves meeting with executive teams and working on sort of, even if they don't have fully formed values, how to build that into not just the OKRs, but the actual products and the services you're providing to companies. So I think there's a softer piece to this as well. Of course, there's recruiting and expertise around sales and how to get your product out into the world. But that other piece of how do we build something that is enduring, resilient, and that matters for the team and for humanity? I think that's softer, but at least as important.
For us, it's a little bit different because we are long-term investors. So Johanna and Andrew are typically investing within a horizon where they kind of pass the baton. It's just the natural progress of capitalizing a company. But when we invest in assets, we're not looking for an exit. We're investing on something that will be there for like 35 years or so, whatever that life of that asset is. So what that means is that, and we do rely a lot on the project sponsors, our clients, to do the day-to-day management of that, to use the expertise that they have to kind of move things forward. But a way that we continue to add value beyond the capital we provide day one, it really is by being very constructive over the life of these assets. have a asset management and asset optimization mindset, like how we continue to create value out of the same asset. And this is typically very aligned with the sponsors because they have a lot of the residual value in these assets as well. Another way is because we have a bigger portfolio of opportunities, we have tons of data that we can compare and contrast. So we often think of ourselves as one of the things we should be doing, and we do, is to help elevate the industry with best practices based on this information that we can share on an anonymous base and make sure that everybody kind of understands what is, what can be done differently. So it also, I feel like, creates like a sense of accountability that holds the industry to the right discipline that ultimately creates sustainable outcomes. So those are these things that we focus as an investor in terms of how we collaborate with our clients and sponsors above and beyond writing a check day one.
Okay. We have multiple forms of a question that I want to ask the group. It'll probably be our only question that we'll be able to before the hour's up. But what are founders, companies, and projects that are getting funded doing differently to earn broad support and capital? Johanna?
Yeah, why don't we mix it up? Daniela, you go first.
Sure, yeah. Idea.
I'm happy to answer from a stabilized asset perspective. There is nothing more valuable than folks performing to the level that they sell that they will perform. That really is what keeps capital providers coming back in, cost of capital decreasing over time. It's really that consistency on delivering and being there to solve the difficult problems and doing so in a way that doesn't deteriorate value to your partners. So I would say that consistency and discipline with your investment, that you have the long-term view of how it all comes together, is what keeps your investors coming back.
Yeah, I don't have one answer here, but I would definitely add that being able to differentiate in a sustainable way, so show a moat that is persistent. If you have, a drone company that monitors wind farms, if you're not doing something very unique with machine vision to think about how you're looking for, blade stability or integrity or something that is demonstrably differentiated and protectable from others, I think you're probably not going to be ready, future proof from a competitive standpoint. And then I think, the other thing we love, I think especially on the early stage, just extraordinary teams that have worked together in the past, know each other, maybe come out of industry. We now have enough track record in the climate world, going back to when we rebranded it previously, clean tech. We have a wave of really, really talented folks coming through, the likes of Tesla and SpaceX and Rivian and a lot of energy companies who are coming out into the startup world with big new ideas. So I think that kind of history of working together and experience matters a great deal. And then capital efficiency. It doesn't, I don't think you have to have a low number for how much money you're going to need over time, but you do have to be able to prove that you've been very efficient with the capital that you've had, and that the next phase gets to key milestones that will be valuable for the next wave of investors to be able to measure your progress.
Eric, I don't know if you want to close us out there. I know we're at time, but I'm happy to add. It's up to you.
No, unless Mike or Jill override me.
Okay.
Johanna, let's answer, and then yeah.
Yeah, great. Just really I would echo those points. I like that concept of that enduring moat. Right alongside capital efficiency is just longer term capital planning than might have been necessary a few years ago. Raise more than you think, and plan to raise more than you think, and plan for everything not to go well. I think when I see a founder come to us with a truly, conservative plan that has some room for error, that gives us some comfort that, one or two things could go wrong, because they will. And that we're planning for that in terms of not assuming that a capital raise 12 months from now is necessarily going to go off without a hitch. So again, we're looking at areas that are really out of favor right now. But when we do that, we say, assume you're not going to be able to raise venture dollars for 3 years or more. How will you bridge that? We believe in your solution, but we need to work together to have a plan for how you can bridge over to the other side. And that might be with strategics, that might mean a creative revenue source. It could mean lots of things. But you need to have an answer, that's got to be a piece of the puzzle in a way that it maybe wasn't always a couple years ago.
Great. Well, Daniela, Johanna, Andrew, I really appreciate everyone's time and answers and insights. Mike, I think I'm handing it off to you, sir, to close us out. But thanks to everybody for attending today. We really appreciate it.
Yeah, just echoing the thanks for everyone for attending, sticking around late. Thank you for the panelists, their time, their insights, and a big thanks to Eric and FischTank PR for supporting this event. If you want to attend future events, make sure you are subscribed to heatmap.news. And if you want to participate in future events, give me a shout. I'm at mike@heatmap.news, or you can find me on LinkedIn. Thanks, everybody.
Thank you
Thank
all.
you.
This was fun.
Thank you.
Bye.